Hey everybody, this is Ben Mitchell. I'm going to be your host today, and as always, I am very excited to be with all of you. Today, we're going to be answering the question, is gold a good investment? I'd like to start by talking about one of the big reasons most people are considering gold as an investment, and that is price appreciation. Obviously, a lot of people are most interested in knowing whether the thing that they're going to buy will increase in value, and for good reason. If the assets we're thinking about buying offers a potential ROI, then that will create greater demand for that asset. According to Statista.com, as of 2023, gold has a 20-year average rate of return of 8.86%. Now, this isn't bad at all and only a few percentage points behind stocks over the same time frame. But because this is a modest average rate of return relative to many other options out there, gold is often viewed as this lesser asset that should hardly be considered by anyone serious about their portfolio. Well, that's another topic for another day, but regardless of those feelings toward gold, you can't argue that an average rate of return of nearly 9% is bad. And in addition to that, because of inflation, you do have the potential to take advantage of gold's price appreciation over the long term as well. As inflation increases, the price of gold increases. In other words, since inflation is compounding, and since our monetary system operates with a highly inflationary bias, that gives reason to consider gold as a long-term buy and hold asset, as that potential appreciation becomes reality. However, I would like to change the narrative just a bit with regard to gold being an investment at all, and give you a new perspective on this precious metal so that you're better equipped for utilizing it in the future. So the first alternative view to gold being an investment is, let's call the money view. Now, in my opinion, you should view the dollar values of gold as arbitrary. Let me explain. Whether the price of gold in dollars is $1,500 an ounce or $2,500 an ounce, it's arbitrary. In the long term, those numbers don't play quite as much of a part in the benefits of gold as one might think. Now, why is that? In the end, what matters is that gold has intrinsic value, which supersedes whatever fiat currency it's valued in. Therefore, it shouldn't be viewed as an investment, but rather true money. True money doesn't have a yield. True money doesn't carry risk. True money simply carries within it all of the needed properties to maintain your purchasing power year after year. So when you think about gold as money versus an investment, it starts to shift things around a little bit with regard to how you think of it and how you might apply gold to yourself. Now, another way to think about it is what you might call the financial insurance view. Because of gold's properties acting as a safe haven against things like inflation, you could think of it more as an insurance policy rather than as an investment. Think about the purpose of any insurance policy. You pay for it every single month in the hope that you never have to use it in the first place. Precious metals can have a very similar dynamic within the portfolio of investors, and that would include those who have a greater concern over things like systemic risk and are holding physical metals as an insurance policy for that. In other words, you may very well be buying metals in the case that our fiat money system fails us. You hope that it doesn't ever happen, but that's why it's insurance. It's there to protect you in the case that something dramatic does happen. So in these two cases, viewing gold as money or as a form of insurance, gold actually isn't an investment in the traditional sense at all, because it's non-yield bearing, it doesn't carry risk in and of itself, it can't go bankrupt. The thing that makes something a true investment is that it carries a risk-reward dynamic. True money shouldn't be viewed in that category, because otherwise it wouldn't actually be money anymore. So, whether you look at gold in the more traditional investment sense and you like the fact that it has an average rate of return of almost 9% over the last 20 years, or whether you consider gold is not a traditional investment at all, either way, it's going to be carrying properties within it that could benefit you and your family, whether that is protecting your purchasing power or acting as an insurance policy against systemic risk. Well, that's it for today, everybody. If you'd like to know more and you enjoyed the content for today, check out the description in the links below, and we'll see you next time.